Good evening. Welcome to the ShadowTrader Video Weekly for Sunday, January 20th, 2013. All right, let's get into it. We're going to start from the top and we're going to work our way down. That means we're going to start with some broad market action and then talk about where my focus is going to be as far as trade ideas for next week. I'm going to start with the S&P. We took out the 2011 high here, correct, over the course of this week. So pretty bullish week, taking it over that area. If we look at the Dow Jones Industrial Average, we are right now sitting right at a resistance point. I've been talking about this for a while, that usually the way the indices work is they're all kind of out of sync with each other. One will break out and the other one will be, sitting at a resistance point. So we can see right here on the Dow, we're kind of just shy of it. So that's going to be a focus point early next week if there's a little more extra strength to see if the Dow can get up over this area. Overall, I'm pretty bullish going into next week, with the caveat that short-term traders are still in control, but I don't think the market is that overextended that we're going to get like a major liquidation break just yet. The NASDAQ Composite is really just kind of slowly grinding sideways up, and you can see here it's got some open space here, so it's got room to move. There's definitely room ahead of there. This has been weak on the heels of Apple and Google and some of these tech stocks that have just been kind of weak in this rally. So you can see here NDX is consolidating in a range and has resistance here. And basically the way I see all this is that the leader of everything, which is the S&P, that's in the clear here, and also the Russell, which is clearly leading to the upside, is going to bring stocks a little bit higher in the coming week. I do think we are obviously putting ourselves out there for some sort of a correction, but we're not that overextended yet. So I think it is possible. One of the things that I'm monitoring closely, obviously, is looking at the profile. And one of the reasons that I think that we are not really set yet to fall back down is the fact that if you look at the way the profile has acted recently in the large consolidation area here, correct? We know that we had basically a market that was just going sideways. Right, I'm going to put this over here so I can draw the arrows here. There we go. We had a market that was just basically, oops, let's close that. We had a market that was basically just going sideways for all these days here. And what was important about all of these days of consolidation, or balance as I sometimes call it, is the fact that the market was making what's known as poor highs, which is right in here. This is a poor high. This is a better high. This is a more of an excess high where you have kind of a thin line of TPOs here. And a poor high is just indicative basically of the market just being in control by short-term traders, and they're getting themselves overly long. And every time that the market comes up to the highs, they basically sell their position because they have weak hands and they're not interested in a bigger move. And what you need to end the auction with, as I call it, a bang as opposed to a whimper, is more of a tail like this one. That's a secure low. This is more of a secure low. You would expect the market not to go back down through that area. When you have a poor high like this where it's just kind of flat, the market can then break through it. So what happened in the market is on 115, we got a little bit of an excess high, but it was really nothing to write home about, right? Notice that here it's 2 ticks above essentially what the high was before, right? Just 2 ticks, so it doesn't do much. And then on the following day, which was the 116 session, which was Wednesday, yet again you had another poor high. So basically what the market is doing is it's short-term traders kind of bulling the market higher, but they're getting scared. They always bring it back. But because these highs are unsecure, they're usually taken out. And we saw that on Thursday and Friday finally, where the market took out the poor highs and ripped, much, much higher. Thursday was a very, very bullish day, and Friday actually followed through on that bullishness. The gap here was not filled, so I do kind of look at that as bullish. Most gaps do fill, but it could happen later, so you do have an empty space here. There was clear double bottom on Thursday, Friday, difference of only 1 tick in the regular trading hour session. So I see that also as bullish, and that traders could have easily taken price down to at least the top of the range on a liquidation break, and that's what it's called when you just have short-term downtrend, you call that like long liquidation, and the market turns back up as it did on Friday. When this short-term liquidation doesn't go as far as it should, I look at it as that basically, the market is still kind of attracting buyers under the hood. So I think that is kind of bullish as well. The other thing that I'm looking at here in the profile going forward is the fact that I am slightly concerned with the fact that Friday's point of control, which is here, the fairest price to do business, did not migrate higher as it should have. If it was a more bullish setup, we wouldn't have had value overlapping the down. I think the value would have been more unchanged. Also, the point of control is lower. We did close relatively high away from value. So again, this is all just indicative of the same thing as I keep saying. Short-term traders are in control. And when I make all these comments about short-term traders, I want to be very, very clear about what I'm saying, in that in no way does it mean that the market cannot go higher. I am actually kind of bullish here. I think the market is going to go higher because I don't think that we've had meaningful excess. There was a little bit of excess here on the high of Friday, but really the market closed strong up in here. I don't really see it as that. What I mean by excess is I think that there needs to be some sort of a blow off top to signal the end of this move, and you'll see it in the profile. We'll get kind of a long single print tail like this, but going to the upside, kind of single, and value will be much lower and the point of control will be lower. And what will happen is you'll have a lot of traders getting long in the hole all up here at the top of the profile, and they're getting long at bad prices. And what I mean by bad prices is simply they're getting long away from value. They are buying away from value, essentially, right? So we haven't really seen that. We haven't seen this really meaningful excess on the upside, and that's why I think we still go a little further. But that being said, the structure is poor. But once again, I know this sounds like a lot of conflicting information, and it kind of is. The market can continue to go up on bad structure, and it can certainly continue to go up on weak hands and short-term traders. The day and momentum time frame can continue to bull the market higher for some time longer, until eventually, obviously, it becomes like a house of cards, and that's how all uptrends end. Okay, so that's some of the nuances that I'm looking at in the profile, over the past week and going forward. All right, let's take a look at some trade ideas, if we can. Let's cross this down and let's get back into here. And here's what I'm focusing on next week. Next week has two really, really important earnings announcements. The first one, of course, being Google. Google I'm kind of just basically non-committal on. I don't really see any type of play here ahead of the earnings. One of the things that strikes me about Google is you're coming kind of to like the middle of a range here, in a trading range, so I really don't know what it's going to do on its number. It could do, any number of things. It could really go either way. So just be aware Google's going to report. I think that it could be probably, the way I'm going to be playing Google next week is that Google's going to report on Tuesday, and what I'm going to be doing is I'm going to be selling out of the money puts and calls probably on Wednesday morning, looking for the volatility crush out of there. A lot of people do this the opposite. They will sell an iron condor on both sides of the market and try to capture it that way before. I do agree that the majority of the volatility will crush out of it. However, what I like to do is wait for the gap to occur, and then in the direction of the gap, let's say that Google gaps down and it's somewhere, let's say it's in here. Perfect example. Let's say it gaps down to 660. I'm confident that the support at 637 or whatever that is going to hold. I will be selling like 620 puts hard on Wednesday morning because they'll have a lot of juice in them, because just because of the large gap down, the options market will be pricing in that Google's going to zero, but it's ridiculous. You'll soon see that by like Wednesday afternoon, all that premium will get sucked out, because the majority of the time stocks that gap down a lot or even gap up a lot, be it on earnings, news, or whatever, will not go further right away. They'll just gap and hold. They'll just kind of sit there, or they'll gap and reverse, which is even better. So that's the way I'm going to be looking at Google on Wednesday morning, because they're going to report on Tuesday evening. The other big name, of course, is Apple. Alpha Alpha Papa Lima. You've probably heard of this stock. They make telephones and shiny sort of square things that you can draw on and all sorts of crap like that. And seems like it's pretty popular. People seem to dig their stuff. And if you look on the monthly, I've been talking about this forever, about the monthly trend line action here. And I believe we're coming right into it, and that is at the currently 466 level. You have to look up here where it says Y because TOS has a little bug in the system here on this new build. You see how this says 800 and it just keeps saying 800. So right in here, you can clearly see that it's at 466, 468, depending on how you get close to it. So let's just call it 470. So how to play? Okay, one of two ways. Either you take a position ahead of the number, or you take a position after the number. The best case scenario here is that Apple gaps down to the trend line on the number, but that may or may not happen. If that happens, I would be a buyer early, even in the pre-market, if I'm somewhere close to this trend line, if I'm close to the 470. If you want to play it ahead of time, okay, one of the things to think of, and I may be actually doing both. I haven't quite decided yet, but I'm going to give you a number of scenarios of how you can do this. Apple is currently at 500. So if we bring up the chain here, the options chain, we see that in the current week coming up here, the implied volatility in Apple options is really, really pumped up. You can see that here. We got 62% here, and they're pricing in that by the end of next week, because the earnings are going to come out on Wednesday, you're going to have a move of at least $35.58 in either direction, plus minus. All right, so one of the things that you can think about in Apple right off the bat is I think that there's a play here in selling out of the money puts, which you can see I already have a position here for next week. I've started selling out of the money puts here at 430, and these were trading well over $1 on early Friday when I sold them, and I actually sent that out via Twitter. I was saying, if you check my tweet, I said, you know, they're pricing at like $1 to $1.15. I said, this seems like overkill to me. I mean, do you really think Apple's gapping down $70? You know, and there was premium in these 70. This is when Apple was trading, you know, like $4.98 or something. So it's like $68 away at these 430s. So I think that that's a pretty safe bet, is to be selling, you know, these puts down here. The other thing that I'm going to be looking at as far as Apple is concerned is a longer term play using further out of the, you know, out of the money, not out of the money, but deep in the money long-term options, I should say, going out like June or July. Let's just take a look at June, for instance, 154 days to expiry. And let's just look at what you'd be looking for. You'd be looking for a call option, deep in the money, at least 90 delta. So you probably want to be catching like the 330 or the, you know, 325, anywhere in this area. You can see where the deltas are well over 90. And therefore, instead of paying $500 a share, you're going to be paying, you know, $170 basically for the contract, which is going to control 100 shares. So it's going to be, you know, this price times 100 instead of the share price times 100 to buy 100 shares. So what I like about this idea better is the fact that you're going to get the one-to-one movement in the stock because you're, you know, well over 90 delta. But the question is, how do you hedge that? I mean, what happens if you purchase this ahead of the report? And there's kind of two ways to do this. Like, I don't know if it's, you have to kind of be thinking of how much risk you want to take. Is, do you want to do it ahead of the number or before the number? But regardless of whether you do it ahead or before, you're going to be so deep in the money here that there's going to be very little extrinsic value in the options. So you're not going to lose anything. If you look at extrinsic here, right? See how small the extrinsic value is here? You know, you're giving up like $1 here that you're going to lose basically for the next, you know, 5 to 6 months. This is in June. So you'll be fine there. But the question is, how do you hedge it? So what I'm thinking is that this is essentially your stock. What you're buying down here, it's going to be the same exact thing like owning stock because you have the 90 plus delta. And then how do you hedge it is, well, basically, wherever Apple is at the time that you buy the calls, I think that you'd want to put on a very wide butterfly or ratio spread on the put side. Also going out to June, so you're basically looking at it as a very long-term play. You're protected until then. And you can see that you can start at, say, 500 where we are now, and you can go down all the way to like 460 is still a credit, so you got $40 protection there. How about 440? 440 is a debit. So how about 445? 445 is a 385 debit, so 450 is probably flat. So from 500 down to 450, you've got $50 of protection during that period for 70 cents. If you want it to be a riskless trade, then obviously you would do it as a butterfly. So you would just buy butterfly of, say, 500 here. And again, this top strike would be wherever Apple is when you put on the trade, if you put it on before the number or after the number. 500, 450 to, I guess, 400, right, to make it even. And that would give you a $9 debit. Now, you might be thinking, well, $9 debit, but remember, you're paying $9 of insurance to protect a position that could be $30, $40, $50 against you, and you're looking to make, say, 50, 75, 100, maybe even as much as $200 to the upside if Apple ever gets back to 700. So you can think of it as insurance, remember, and this is insurance that's going to be good for like the next 6 months. You're just going to be sitting on the calls, and then you're going to have this very wide butterfly or ratio spread protecting you on the put side. Now, obviously, you're not protected down to zero. You're not protected even basically past 50 points, right? You're only good until 450, depending on how you structure it. But it's a lot better than just being naked and having, you know, the stock gap down $30 against you or whatever. So this is one way to look at it. Obviously, the best case scenario, as I was saying, is if the number comes out, you have no position, and it gaps down. But if you feel that the gap is going to be up, or, you know, if we sell off down to the trend line in the next couple of days between Tuesday and Wednesday, which is possible. I mean, Apple was definitely showing some relative weakness to the market. Then that would be another scenario in that sense, if we were very close to the trend line, I would be a buyer before the number, and then I would put on the hedge. I would be a buyer of equity and deep in the money calls, so that would all basically just be equity, be it regular equity or synthetic equity, and then I would put on the butterfly spread or the ratio on top of it on the put side going all the way out to June, and then I would leave the stock on the calls alone, you know, for a few months and see what happens. That's how I would do it. That would be the best case scenario, but it may not happen. Apple may rally in early next week or go sideways, still be $20, $30 above the trend line. You know, the trend line's at 470. Apple could be 500. So again, you have to make a decision next week. You've got to, if you're going to put it on ahead of it, you got to have some sort of a hedge on. I think it's kind of asinine to just put it on and just assume they're going to have a blowout quarter and everybody's going to love the stock and it's going to be great. And you know, then it could open up at 440. I mean, who knows? You know, so that's basically, these are the different scenarios that I'm laying out for you and what I'm looking for in Apple, you know, in the coming week, and how I'm going to be playing it depending on how it acts, you know, Tuesday and Wednesday or whatnot. All right, a couple more ideas to leave you with before I go. I think that there could be opportunity in a price line ratio spread up at the 695 resistance. If you look at the daily here, this is the 695 resistance right in here. So you're right up at the top here. The stock's currently trading 672. If we look at the Analyze tab on PCLN, you can see here I already priced it out. The 690, 695 call ratio is 55-cent credit, so that's something to look into. I am slowly legging back into UNG covered calls, which I started on Friday. I like this play, as I was talking about a lot on natural gas. I said that I passed on a natural gas long here in the futures market, which is true. I do not have a long NG position because of the trend line break here. Since then, natural gas has strengthened up considerably. I think that this low here is secure now. Oh, this weekly is not going to show up. I apologize. I think that this low is pretty secure down at these levels. So when the ETF rather that tracks natural gas crossed $20 on Friday, I started doing a covered call there, selling the weeklies, and it's not bad. It was about 40 cents. Here you can see there it's about 40 cents at the $20 calls. You can see I just started with about 20 of them, so that's on 2,000 shares, and right now, basically, that puts my basis in the stock at 1960, and I would just basically rinse repeat. So that's something to be looking at as well in the coming weeks. All UNG has to do is just stay sideways to mildly up, and that will be a fine play to work on. All right. Last thing I'm looking at in the coming week is a possible short on GC in the futures market. Look at what gold is doing relative to its trend line. And it looks like it's coming right up into that area now where it may want to find resistance right in here, right at the trend line. One thing that I do, and reason why I think this is going to be a short, is because notice that the dominant trend line is here and we never traveled to the low of it. So gold's kind of getting ahead of itself. I think that the short point is here. That's going to be about 1710 area, wherever these two lines meet. And my goal is to have gold roll back to at least a 50% retracement of this move here from up to down, if not all the way down to the ascending trend line at 1620, which I think could happen because these two lines are probably going to narrow as days, weeks, and months go on. So that's a play that I'm going to be looking at in the coming week as well. All right, that's all I have for today. I hope it's of use to you. On behalf of myself and the entire ShadowTrader team here in beautiful Philadelphia, Pennsylvania, as always, I wish you good trading and good night.